Happy Wednesday, everyone. It's Andrew. Happy to have you here. And we're thrilled with the amount of people that are showing up for the live stream to listen to me rant about random topics. And I'm not here to rant and preach in a certain way, but more to just get feedback from people out there, not just Canadians, but we like to focus a lot on Canada because we live here in beautiful Vancouver. And today we want to take a little bit of a bite out of real estate. And of course, this last few weeks, actually the last certainly a few years, we like to bring things back towards mining and certainly precious metals. And that's coming from someone, as I say always, I'm not a gold bug. When I was at Merrill Lynch, I was the furthest thing away from it. It was all tech. That's where it interested me. I still have obviously a big interest in AI development and the technology and energy and the kind of future of what everything looks like. It's a lot more fun to focus on that. But when we have times of crisis and chaos and uncertainty, you have to look back at fundamentals, and that's certainly housing. That's a core fundamental, but that also includes gold, and that is one could argue not true, and certainly from the data, one would say that it's almost non-existent, because let's just start off with the average Canadian. It's about 77% of their assets is tied up in real estate. So that's your one investment, essentially. We've got very high tax rates here. It's a very high cost of living. A lot of that is housing. And I would guess if you were, and they don't have this data, but if you were to somehow get what's the average Canadian's portfolio in gold, it would be so small. It would be hardly recognizable. We've seen, of course, a big jump and step up from the likes of Costco selling gold and whatnot. And we'd love to get your feedback as to if you even entertain the idea of gold. Do you just buy an ETF? Do you actually like buying physical gold bullion? And what your thoughts are on that. Of course, we always drive people towards starting this kind of conversation, lighting a fire in them so they could go to their financial planner, go to their advisor, their broker, their consultant, and say, hey, should I be looking at diversifying my portfolio? Should I be doing this? Should I be doing that? That's where we find that we're helpful, is trying to really jog people's thoughts and get them excited about being open to look at other things. And right now, it's very tough in Canada because all of our assets are essentially tied up in housing. If you look at something that's just come out from Better Dwelling, which is actually, it's a pretty good blog page kind of page here. And, we'll look at the RBC report here as well, but RBC is kind of warning people here in this article that, that there's some issues here with supply and whatnot. And I don't pretend to be a real estate expert. We can talk about a number of factors that are affecting RBC with housing. Cost of housing, cost of material, cost of employment, cost of labor. All of these things have increased incredibly high since the lockdowns and the shutdowns. Inflation in those areas have been quite high. Canada's felt that significantly hard. But the flip side, on the good side, we've been fast at dropping our rates, and our current rates are actually not bad. Certainly over a long period of time, like right now, a 5-year fixed rate. Now, of course, people can get better or less, but arguably it's 4.34, just say. A variable rate, 5.4. That's not bad. That's not like when we were really focused on looking at rates in the States, and you're looking at a 30-year rate of 7-8%. That changes outlook very, very, very differently. And rates are looking to come down. And we've said that for a while. You can't continue in the US or Canada with high rates. The punishment has to end sooner or later. We have to pay the toll for the trillions of dollars that have been printed. And to some extent, some of those are being paid and eaten up. And, that chunk of money that's been taken from the vast majority of us has been pulled up into the upper echelons of the global elite type of class, more so in the last 4 years than any other time. And that's just the way it goes. Inflation, eats away at people's daily life more than anyone else, rather than the wealthy. They can handle the hit. But if we look I'm going to jump quickly to another article where it says here, Canadian households are worth more than $1 million from the Financial Post. That's the average household net worth is $1 million. That's very high. Of course, 70-something% of that is your housing. That makes up a significant point. If you had lived here 20 years ago and you were able to ride that wave, even 10 years ago, make substantial gains, that's great. But you're forced then to go, I've made a huge win on selling my house for a good profit. You're entering in a higher yet market again, and at a little bit higher rates. That makes it very challenging. What we're finding is that a lot of Canadians are leaving. So people that have been here for a while, they look and go, you know what? I don't like the path that we're going on, policy-wise as a country. That's a first obvious, issue. We're not really open for business for the most part. That hopefully will change here soon. Why am I paying into a system that's not going to benefit me at all? So there's complaints, and then people taking that money and going elsewhere, because it's hard. It's not easy to buy a new house. And, we've talked about, Gen Z and not feeling like, hey, like, listen, we've kind of been screwed. You have to a certain extent. That dream, that promise, which hasn't been made for a while, of being able to have that middle class lifestyle where you can have a house with a yard and kids and whatnot, that has been taken away because of massive inflation, of driving up in Canada specifically. No other investment asset other than turning your home, which I would argue shouldn't be your income asset or your investment. It should be your home that you want to stay in for a long period of time, into being a tradable commodity. And doing that also means you change a culture. And we're going to tie this back into gold as well, because old is new, and these are important topics, because when you make everything just a tradable commodity, that changes how people view everything in their day-to-day life. Most people don't consider where they live a home. Someone my age might consider their childhood home a home, because that's where they grew up. They spent a long period of time there. There's lots of memories. And you're building, you've got a family, you're building, lots of memories with people, your brothers, sisters, and whatnot. That's less likely to happen because the turnover is so high now. It's just a house that you live in, then to hopefully trade up. And you just move on to the next one, almost like a car, which is crazy. That is an interesting conversation that we won't have now, but maybe have with a friend. How does that change your day-to-day existence when you think, this isn't a home I intend on living forever, and I'm going to put my time and love, and I'm going to design it. It's going to be something I'm going to live in for 2 years, 5 years, 7 years. Then I'm going to flip it and move into something else. How does that then view when you go home and you think, oh, I'm going to, rest in my home, or this is my space? If you feel like maybe it's just temporary space, maybe I only live here for a short period of time. So there's some psychological differences, and that does reflect on culture as well. And that cost then is enormous with real estate. People will jump in, of course, and they'll talk about the interest rate situation. And once again, we've been pretty good with dropping rates a bit. I don't think it's any surprise to imagine they'll drop aggressively more. They sort of have to. We've kind of put ourselves into a very tight situation. And certainly if you look at the U.S. debt, they're over $1 trillion in payments now. It's unsustainable. So the timing of when they do it, that's the question. And that's where people and the algorithms are trying to figure out, is it going to be a rate cut now? Is it going to be next month, 3 months from now, 6 months from now? The US is a little bit different than us, but Canada is easing off, and they have to, because we're hit the hardest. The average person with their home being tied in, with there not being the locked in 30-year rates where people have to renew every 5 years. There was a lot of people renewing last 6 months, last year, at higher rates. And that can hurt, especially whenever we had talked before, your cost of food is up about 30%, your cost of energy is up about 20%. All these things have been increasing dramatically. Even though, once again, CPI is different. They all do like X energy, X housing, X certain factors that they, in their basket of goods, just don't want to, for whatever reason. That's another debate that economists will have as to why they want to remove things or why they want to have other things in. But it's important to just even slightly bring that up, because Often people will argue about terms and argue about things because they're not agreeing on the same terms. So when you say, well, inflation is only 3%, go, no, hold on. If you're using the CPI, what are they using the CPI this year? And you look at that basket of goods, and then you go, well, let's look at, if I go to the store and this is what I tend to buy, how come I'm not seeing it being a 3% rise? How come I'm seeing it at a 30%? How come meat is almost double? So it depends on what are the actual variables that people are debating and arguing about. And often they're not similar. And it doesn't help whenever they change the terminology and change definitions. So we noticed that during the lockdowns, they changed the definition of what a vaccine was. We won't get into that. They've changed the definition of what a recession is. We can leave that alone. But it's important to know that because, once again, if you don't know they've changing definitions and they're changing, information, or that, the jobs report comes out and that they have revision numbers, you will believe the first headline article that jobs report 225,000 people in the US. You'll not recognize later that when they put out, oh, sorry, the revised number is 120,000. You won't recognize that. You'll think, oh no, everything's great. It's huge. There's a lot of jobs. And that's, people might say that's just a trick. And it is to some extent. But those in the market know that that's just what happens, and that, you have to be on top of these numbers and be very vigilant. Unfortunately, like we had mentioned before, there's not a lot of traders out there per se. It's a lot of algorithms, and those algorithms will jump over headlines, will jump over immediate news and act before anything else. And that, of course, affects markets and affects volatility. And traders, with these algorithms, love volatility. So why does this matter? Why does this fit in? Well, if 77% of your income or your investments are all in one asset, that's dangerous. That's very troubling. And I would, ask you, how much gold do you own? Most people wouldn't have very much. And I don't mean it in the sense of rush out and buy gold bullion because it's the end of the world and it's a zombie apocalypse. That narrative is out there. But it's more that we've seen a great run up, except for today. The last 5 or 6 days, it was a great escalation of gold. And the future is going over 2,500 as well. So it's looking great. It's pulled back a lot today. And it's been trading, in this kind of band for months and months. But it's a great band. It's been a great trajectory over the years. That also gives you a hint and reflection of inflation in general as well. And if you had just sat in gold in the last 9 years, you would have done exceptionally well. And it's the most boring thing to look at. They try to make it exciting. We'll see here this article from Kitco, and here's a shout out for Kitco. If you want to know anything about gold, it's one of the best places to be. Peter Schiff is also another great person. We'll talk all day long about gold. They certainly are the place to go for getting kind of gold news and whatnot. Why this matters is that that BRIC story ties in, with a lot of companies, kind of highlighting, are we coming off the US dollar reserve being the key currency? We see Trump saying that, no, he's going to make sure that US dollar remains the key world reserve currency and dominance reserve currency. All of this matters. The housing issue is the biggest one here in Canada. I'd love to know your feedback. Most people are home owners, and those are good investments because you get leverage. You're not paying someone else in payments for living in the place where you're living. So there's lots of benefits to it. But are we overreaching? Have we relied too much on driving our whole economy on the basis of one sector, real estate? And that was driven by foreign money for a long part. If we bring up the Denton's article here, Insights, everyone will be very well aware that they put in that the prohibition on purchase of residential property. That had a huge effect as well, because we were getting massive influx of cash, investment cash, and you could see buildings here going up and they were empty. Full, huge, bright, beautiful looking downtown condos that were essentially empty. You never see anyone come or go from it. And that's a whole other conversation about ghost finance, ghost money, money laundering, and all those other wonderful things. and they wanted to clamp down on that because it's very awkward to have unaffordability, a lot of housing crisis, a huge increase in rents, and empty buildings. So the government stepped in with that kind of solution. We've also had mass migration into Canada in the last few years, which has really pumped up housing as well, but also a demand and drive for building condos. And that's slowing down. That's slowing down quite a bit because also there's changes now in the way that people were getting in as well through schools and doing a course here or whatnot, and then being able to stay under certain guidelines. They're closing up some of those loopholes now as well. And once again, it's the cost of goods and services and work. Inflation is there. It just simply is. And there's relief on the way, I believe. I think we've got a bit more pain to go. I'd love to hear your thoughts. And I'm certainly, wouldn't dissuade anyone from owning a home. It's one of the best goals someone should have. For me, though, the question would be more of a philosophical one. Should we be considering that the place we buy as a home? Like, would that be a better mindset to have, that this is my home, somewhere I want to live, rather than it being an investment? So that's just a question out there. I'd love to hear some feedback from people, and what your thoughts on gold are. I mean, it's done well. I think we've got a long way to go with gold as well. And maybe you can let me know. I don't see chaos simmering down anytime soon. And I know I'm smiling. I seem flippant about it, but I'm just trying to kind of make light of a situation that isn't light at all. And people flock to security. So that's the question to you. Should you be looking at gold? Should you be talking to your broker about diversifying more? Are you tied up too much? Are you, what they say, cash poor and house rich? It's a good time to start asking those questions. And if you're a new time buyer, reach out to us. How do you get into like $1 million home here in BC on a new starting salary? If you're Gen Z, how does that work? How does that happen? Anyways, those are hot topics, but we like to stir the pot. Love to hear your feedback. Thank you so much for a lot of the live streams and comments. And we look forward to talking to you later on. Take care and enjoy your Wednesday.